The American economy, long considered a beacon of stability, is reeling. A seismic shift in global finance has sent shockwaves through Wall Street and beyond, leaving economists scrambling and policymakers grasping for answers. The source of this turmoil? A staggering $390 billion sell-off of US Treasury bonds, orchestrated not by hostile foreign powers, but by America's closest allies. This unprecedented flight of capital is a direct rebuke of President Trump's increasingly isolationist and protectionist policies, a stark illustration of the waning global confidence in his leadership. For years, foreign governments, particularly those with close ties to the United States, have been steady buyers of US debt, viewing Treasury bonds as a safe and reliable investment. This influx of foreign capital has helped keep US interest rates low, fueling economic growth and supporting the country's insatiable borrowing appetite. However, the Trump administration's aggressive trade tactics, marked by escalating tariffs and a disregard for international norms, have shattered this fragile equilibrium. The message from the international community is clear. Trump's America First agenda is coming at a steep price, a price that America can no longer afford to ignore. The economic aftershocks of this massive sell-off are already being felt across the country, threatening to undermine the very foundations of the US economy and leaving many to wonder, has Trump finally gone too far? And to fully grasp the magnitude of this financial earthquake, one must understand the crucial role that US Treasury bonds play in the global economy. These bonds are considered among the safest investments in the world. Foreign governments like China and Japan have parked trillions in US Treasuries. This demand has kept interest rates low, aiding US budget deficits. However, protectionist policies have sown doubt among investors. Tariffs have sparked fears of a global trade war, threatening the global economy and US assets. Attacks on the Federal Reserve have compounded this anxiety. The result has been a dramatic exodus from US Treasuries. Foreign governments seek to diversify their holdings. This sell-off has driven up interest rates. Higher borrowing costs will likely slow economic growth. The seeds of this financial turmoil were sown long before the current crisis, sown in the fertile ground of Trump's America First ideology. From the outset of his presidency, Trump has railed against what he perceives as unfair trade practices by other countries, accusing them of stealing American jobs and undermining the US economy. His weapon of choice in this self-proclaimed trade war: tariffs. Tariffs, essentially taxes on imported goods, are designed to make foreign products more expensive, thereby encouraging consumers to buy American-made goods. While the Trump administration argues that these tariffs are necessary to protect American jobs and reduce the trade deficit, economists warn that they could backfire, leading to higher prices for consumers, retaliation from trading partners, and ultimately slower economic growth. Despite these warnings, the Trump administration has doubled down on its tariff strategy, slapping tariffs on billions of dollars worth of goods from China, Mexico, Canada, and the European Union. These actions have sparked outrage among US businesses and consumers, who are already feeling the pinch of higher prices. Moreover, they have drawn sharp criticism from international leaders, who accuse Trump of undermining the rules-based trading system that has underpinned global prosperity for decades. While the Trump administration continues to tout the supposed benefits of its trade policies, ordinary Americans are increasingly feeling the squeeze. The tariffs imposed on goods from China in particular have rippled through the economy, driving up prices for a wide range of consumer goods from washing machines to cars. The Buy American mantra, while emotionally appealing, ignores the complex realities of the global supply chain. Many products marketed as American-made rely heavily on components sourced from abroad. Tariffs on these components translate into higher production costs, which are ultimately passed on to consumers in the form of higher prices. The result is a steady erosion of consumer purchasing power as families struggle to make ends meet in the face of rising costs. This decline in consumer spending, a key driver of economic growth, could further exacerbate the economic slowdown, potentially pushing the country towards recession. The administration's promises of a manufacturing renaissance ring hollow in the ears of families forced to choose between putting food on the table and buying American. Section 5. economic tremors, a system under strain. The $390 billion Treasury bond sell-off is merely the tip of the iceberg, a visible manifestation of the deeper economic anxieties plaguing the US economy. The warning signs have been flashing for months, with each new economic indicator painting a worrisome picture of an economy teetering on the brink. The stock market, often seen as a barometer of investor confidence, has been on a roller coaster ride, experiencing bouts of volatility unseen since the 2008 financial crisis. The manufacturing sector, once a bright spot in the Trump economy, is showing signs of contraction, with factory orders declining and manufacturing activity slowing to its lowest level in years. The Federal Reserve, tasked with maintaining the stability of the US financial system, is caught between a rock and a hard place. Raising interest rates to combat inflation could further slow economic growth while keeping rates low, risks fueling asset bubbles and exacerbating financial instability. The once envied American economic juggernaut now appears vulnerable, its future uncertain in the face of Trump's unpredictable policies and the looming threat of a global trade war. Perhaps the most concerning aspect of the current crisis is the damage it has inflicted on America's standing in the world. The Trump administration's America First approach, characterized by unilateralism and a disdain for multilateral institutions, has alienated many of America's closest allies. The decision to impose tariffs on steel and aluminum imports from Canada, Mexico, and the European Union, ostensibly on national security grounds, was met with disbelief and anger from these long-standing partners. The subsequent retaliatory tariffs imposed by these countries have further inflamed tensions, poisoning relationships, and undermining decades of carefully cultivated trust. The $390 billion Treasury bond sell-off is the latest and perhaps most potent sign of this erosion of trust. It signals a fundamental shift in the global perception of the United States, from a reliable guarantor of global stability to an unpredictable and unreliable actor on the world stage. This loss of soft power, the ability to influence others through persuasion and cooperation, could have far-reaching consequences for American interests, diminishing its ability to shape global events and undermining its leadership role in the world. As the economic storm clouds gather, the Trump administration has resorted to its familiar playbook: denial, deflection, and the relentless scapegoating of others. Trump, never one to accept responsibility for his actions, has dismissed the sell-off as a blip and a nothing burger, accusing the media of exaggerating the severity of the situation. His economic advisors, echoing their boss's defiant tone, have downplayed the impact of the tariffs, claiming that the economy is strong enough to weather the storm. They point to the low unemployment rate and continued economic growth as evidence that the Trump economic plan is working. However, these claims ring increasingly hollow in the face of mounting evidence to the contrary. The stock market volatility, slowing manufacturing activity, and declining consumer confidence paint a far different picture, one that suggests an economy on shaky ground. The administration's attempts to shift blame to the Federal Reserve, China, and even the Democrats ring hollow, failing to address the underlying anxieties fueled by Trump's own erratic policies. The $390 billion Treasury bond sell-off is a stark reminder that the United States is not immune to the laws of economics or the consequences of its actions. The Trump administration's America First policies, far from making America great again, have sown the seeds of economic uncertainty, alienated allies, and diminished America's standing in the world. The path forward is fraught with risk and uncertainty. Continuing down the current path of protectionism and isolationism risks further alienating allies, provoking a full-blown trade war and plunging the global economy into recession. A course correction is urgently needed, one that prioritizes diplomacy over confrontation, multilateralism over unilateralism, and a recognition that global challenges require global solutions. The question is whether the Trump administration, so deeply invested in its zero-sum worldview, is capable of such a course correction. The answer and the fate of the American economy hangs in the balance. The alarm bells are ringing, their deafening clang reverberating through the halls of power. The $390 billion Treasury bond sell-off is a wake-up call, a reminder of the delicate balance of trust in the global economy. The consequences of Trump's actions are now playing out, threatening the global economic order. This crisis could be a turning point, a catalyst for a much-needed course correction. The Trump administration could double down on its policies, leading to further turmoil. Or this crisis could force a reassessment of priorities and a return to cooperation. The choice rests in the hands of the American people and their leaders.